Retail gas prices, Helima, have fallen for 21 consecutive days. And it's not just oil, right? Copper prices are also at, I think, 19-month lows. So talk to us about what's happening. These recession fears starting to really overcome the tight supply, which had been driven oil prices most of the year.
I mean, absolutely, Sarah. I mean, this was a brutal macro-driven sell-off. Entire commodity complex was hit today, except for European natural gas. I mean, clearly they're pricing in concerns about recession, about demand destruction. We are seeing consumers starting to change behaviors, using public transportation more, driving to cheaper gas stations, putting off discretionary travel. But we're not really seeing a major hit to demand yet. The fundamental backup for oil remains strong. But again, macro sell-offs can be very brutal.
Has it made you change your mind about where prices are headed? Because you've been pretty bullish on this idea that with Russia out, that it's going to be very tight supply and very high prices.
I mean, Sarah, we haven't changed our fundamental story on the market. I mean, we look out for the back half of the year. We do see a market with thin spare capacity shock absorbers. I mean, we will be clearly watching for signs of demand destruction, but demand destruction events are relatively rare. If we look at 2008, there was far less discretionary spending that consumers had when that actually hit. And so we think the consumer's in a better position. But again, this macro story can overwhelm fundamentals, and that's what's happening right now.
How bad is it getting in Europe as far as gas and lack of access? And what do you expect to see here?
I mean, Sarah, this is a really serious economic story for Europe. And we already have the Russians, slashing flows through the all-important Nord Stream 1 pipeline. There had been a Norwegian gas strike today, which was causing a lot of concern about what would happen if Norwegian supplies came off the market. They're the second largest supplier into Europe. That strike has seemingly been settled. But this Russia story is going to continue to weigh on markets in Europe. There are real concerns that Nord Stream 1 will not restart, that Europe may have to brace for potentially a full Russian gas cutoff this winter. And so when we look at Europe, we say basically they are the front lines in terms of the economic fallout from this war.
What do you think is going to happen there? Are they going to have to seriously ration gas? Is there any other source they can get it from?
No, I mean, this is the problem. There's no SPR for natural gas at this point, Sarah. And so basically, there really is not another supplier that can backfill Russian losses on a significant scale. And so, yes, we're going to potentially have to look at rationing, industrial curtailments. That's why you have European governments coming out and talking to consumers about ratcheting down consumption. We're not really having that conversation on the scale in the United States that is happening in Europe at this point. But again, for both Europe and the United States, it's going to be demand that really balances this market.
No, I think it's why the European recession worries are sort of at a fever pitch today in the market. The euro's plunging. Finally, Helima, just wanted to ask you about this tweet from President Biden and then the counter tweet from Jeff Bezos, because he continues to put political pressure on oil companies, the president, that is, saying my message to them running gas stations, to companies running gas stations and setting prices at the pump is simple. This is a time of war and global peril. Bring down the price you are charging at the pump to reflect the cost you're paying for the product, and do it now. And then Bezos calls him out for saying it's either straight ahead misdirection or deep misunderstanding of the basic market dynamics. I assume, Helima, you agree with Jeff Bezos, but I do wonder what you think the president is after here and what that relationship is going to look like.
I mean, I think for President Biden, the challenge that he has faced is there is no easy supply fix to this market. Again, we keep saying it's going to have to be demand that balances this market because we really have a shortage of spare capacity. And so I do think as we look at, into the midterms, the president is trying to find a way to show voters that he is sensitive to the concerns about inflation. But again, going after oil companies or talking about gas stations, that's not going to fix the fundamental issue in the oil market of a shortage of spare capacity. Again, demand will balance this market.